Hi, I'm Toby.
And I'm Nick.
And we're here bringing you the Pure Property Podcast with Track Capital, where we talk about all things property and property investment. And the aim of the podcast is to provide you with bite-sized chunks of our industry insight and knowledge to help investors invest intelligently. So this week we thought we would end the year with bringing you our property market predictions for 2021. So a lot of pressure on us for this one, Nick.
Yeah, obviously looking back at 2020, it's been a very, very turbulent year with a lot going on. So we hope 2021 will be a bit more stable. But today, as you mentioned, we'll go through what we think is going to happen and why we think that.
Yeah, I mean, this year has completely flown by. It's like we've blinked and it's over. Obviously, we've got Christmas literally on our doorstep, New Year's, and then 2021 is upon us. And it's going to be interesting to see what this year brings, especially, as you mentioned, after the year we've had. Hopefully onwards and upwards, I would say.
Upwards and onwards, yeah, that's the one.
That's the one. Right, so first of all, I think before we go into our predictions, why don't we take a look at what we factor in when making our predictions?
Yeah, absolutely. So there's a number of things that we just wanted to outline today which could potentially affect the performance of the UK property market next year, or certainly have some kind of influence on it. So a couple of those factors would be things like the looming Brexit position, so whether we secure a deal, things like the rollout of the vaccine, how successful that is, if the Oxford AstraZeneca one is approved by the regulator, what the government's doing in terms of their policy. Those are a couple of things that we think about. Toby, your side?
Yeah, some other things that we will factor in is supply and demand. We look at lending, so what are mortgage lenders doing? Are they being favourable with their lending? Are there a lot of products on the market? Because this will obviously affect how many people are able to buy. We'll also consider interest rates, so what are interest rates doing, as this will again affect consumer confidence and affects people purchasing as well. And then we just look at the general economy, which again is going to be slightly difficult to do after the year we've had. So we can take a slight view on it and make some sort of good predictions, but I suppose we wouldn't be able to get it exactly spot on. Otherwise, it wouldn't be a prediction.
Yeah, and I think another thing to think about as well is the government policy. So the 2020 property market was affected by things like furlough and various incentives that the stamp duty introduced, such as the stamp duty holiday. Now, as we go into next year, we're going to see that stamp duty holiday come to an end. We're going to see other changes to various tax regimes, such as an overseas surcharge for non-resident buyers. And all these things could obviously lead up and affect the property market.
Yes, so that is sort of an overview of some factors that we do consider when making our predictions. So just something to bear in mind if you are thinking yourself about what to look for when you're going to consider what the property market will be doing next year in 2021. So why don't we move on to our predictions, Nick? So quarter one, I mean, I don't know about you, my prediction is quarter one is going to be busy. We have seen the property market going from strength to strength. Surprisingly to a lot of people, if you take in consideration the position we're in at the beginning of the coronavirus and our first lockdown, people thought it was going to crash, were very worried, a lot of hesitance in the market. And then we saw it once the market opened back up and the stamp duty holiday was announced. We saw it soar and take off, and since then it has been, as I said, going strength to strength, and house prices have been increasing across the board in general when we look at the average. So I think that is going to carry on in quarter one. It's going to be busy. We're going to have the demand there, which is going to push the market forward, and I think we're going to continue to see a rise in prices. And the main reason the demand is going to be there, we've got the people wanting to beat the stamp duty land tax holiday, and also you'll have the overseas investors wanting to get in before the 2% surcharge comes in there. I mean, what about you, Nick? Is there any other factors you think would determine how quarter one's going to go?
Yeah, well, firstly, I definitely agree, and I think it's sort of industry-wide that a lot of people are forecasting a very, very busy quarter one, so January, February, March of next year. Exactly what you mentioned, so government initiatives are playing a key role in that, so people beating the stamp duty holiday, overseas buyers getting in before the surcharge, but also just due to the fact that, December's over, it's a fresh new year, people are going to make decisions, they're going to take action. We did see some pent-up demand released throughout 2020, i.e. people deciding to take action. But I think there is also a subsection of investors and buyers that simply will just naturally wait until 2020 is played out. And then we might see those guys come to the market in quarter one of 2021 as well. So, yeah, I think it's going to be a busy few months to the start of next year. And that will lead us nicely on to quarter two.
Yes, so quarter two. My prediction is that we will see a softening in the market. Now, I don't think we're going to see it crash or prices start to drop across the UK as an average. All that I think will happen is the demand that we've seen sort of rush into the market to beat that stamp duty holiday will just soften, where the stamp duty holiday will end. They may extend it or phase it out, but still I think the effect will be the same, and what we'll see is some demand fall out the market, but I don't think it's going to be enough to really damage or dent the market. I just think it will soften and then potentially stagnate and just slow down for a period of time, just while we see this correction of people sitting there, getting their head round it, waiting to see what's going to happen after that deadline at the end of March, and seeing how it plays out. So you'll have a few people sitting on their hands, but you will still have the demand there because people are going to be needed to move. The year would have started, and you'll have the real motivated buyers and sellers still there in the market. Mortgage rates are still favourable, so I think a few of the fundamentals that should play a factor in keeping the demand still positive will be there. So like I mentioned, the lending, obviously interest rates as well, and that will help keep the prices propped up. Not rising massively, but propped up.
Yeah, definitely. So I think overall, with all of these different timeframes throughout of next year, there's always going to be influencing factors, but we're always going to have the main ones, which are there encouraging buyers and investors. So like you say, positive lending criteria, attractive interest rates. If the economy is looking stable and things are looking a bit more positive unemployment-wise, if furloughs potentially coming off to an end, but people are a bit more confident. So there's always going to be things that affect it. But overall, I think quarter two next year is probably going to be more of an averaging out of considering quarter one as well, i.e. be really, really busy in quarter one. We'll slow down a bit in quarter two. So as we come to the end of quarter two, it's almost going to even out and be a bit more of a balanced market. But I think certainly come sort of April, May, just before we get into the summer months, it'll probably slow down just a touch.
Yeah, and then I believe that quarter three, we will see the market begin to pick up. So we'll have sort of demand slowly rise, just where people are starting to get to grips and get their head around the market, that everything's moving along as it should be, and then we'll start to see confidence creep back in, and that will lead to, I'd probably say, maybe not straight away in quarter three, but maybe midway through, we'll definitely see that confidence really start to pick up, and then we'll head into the autumn and we'll see the natural autumn demand, which we'll see. So sort of around September time, towards the end of August, I think we'll really see a pickup in the market and it will start to strengthen again.
Yeah, I think quarter three, quarter four are going to show similar sort of patterns and a similar level of demand from buyers and investors. So hopefully, fingers crossed, by that stage we would have had a chance to see how well the vaccine's being rolled out. General sentiment in the market's hopefully going to be a bit more positive once we see COVID cases, coming back down. Maybe we'll be settled with things from Brexit, or at least we'll be certainly a lot more clear about where we're going. Businesses will know how to plan, etc. All of those contributing factors are ultimately going to influence demand. But going into quarter three, we'll see, in my opinion, we'll see a slight pickup, and then hopefully finishing up October, November in a really positive, buoyant market, hopefully after what's been a more stable year than we've seen in 2020.
Yeah, definitely, and I think we will sort of be heading towards the end of the year on a high and fairly strong as well, which will be positive and then obviously lead us into the following year.
Absolutely, absolutely. So with that in mind, then that's obviously a quick overview of how we see things playing out. Again, just a quick disclaimer, this is going to vary significantly depending on how the next few months go, namely with the Brexit deal. I think that's going to have a big impact on the market.
Yeah, and I think the economy as well, that is an external factor which we don't really know wholeheartedly how it's going to play out. We can hope that obviously unemployment, redundancy, etc., won't be too bad next year. But again, there's so many factors around the economy which could alter what we are predicting. But obviously, we've taken an overview of how we've seen this year and what we think the year is going to do next year, and hence us coming to sort of our conclusions on what we think it's going to do next year.
Absolutely. So hopefully that all helps. So if we move on now to have a look at what the experts are saying in the industry, what are the big established property companies predicting and forecasting?
You're talking about us, Nick?
Yeah, that's the one. Yeah. And then we can look at, the specific data. We will give our expert advice at the end in terms of where we think things are going in terms of percentage growth or decline. So that will be our expert insight. But before that, should we run through a couple of the major players in the game, Toby?
Yeah, I think if we look at Rightmove firstly, so they've been very optimistic, and in short, they are predicting an overall 4% rise in the UK house prices for 2021, which of course it looks very promising, very positive. We just have to bear in mind that of course Rightmove is a property portal, so there might be a slight bias there. And hence why they might be a little bit more optimistic. But that said, they've got access to a lot of data. They are a big company, one of the biggest portals here in the UK. So we have to take what they say with a bit of clout.
Yeah, with a bit of pinch of salt as well.
Yeah.
So if we look at the sources, the data, the numbers that they're using in their reports, and that gives us an idea of how they come to their forecasts. So we'll include that in the show notes. You guys can have a look at the information that they've provided, and it's a really useful read either way. So yeah, definitely, I think Rightmove have been on the more optimistic and the more positive side. If we look at other companies, just a touchdown from Rightmove, Savills. So again, a huge worldwide property consultancy who we regularly quote. They're being a bit more pessimistic, so they think the market's going to be stagnant. So they see over 2021 the market averaging out, not much happening either way, not increasing too much, not going down too much. So their actual forecast for 2021 is 0% growth. So being very, very stagnant, and then that changes as things really pick up and they go into 2022, or they look at 2022 with a 4% growth predicted for 2022 across the residential market of the entire UK. So yeah, Savills being a bit more hesitant to be looking at growth as early as the next 12 months, but they do see it coming, just maybe a couple of months later than Rightmove.
Yeah, I would definitely say Savills. They're playing it clever there. They're sitting on the fence completely. They're not going either way. So yeah, I would have thought they would have maybe committed one way or the other, but fair play, they're sitting on the fence. What about JLL? What are they saying, Nick? I know you're a fan of JLL, so yeah, what are they looking at for next year?
Yeah, again, a similar calibre of company compared to the likes of Savills and CBRE and Knight Frank. So there's, again, a company that will go to extensive measures to get the right research, to collect the data, to consider numerous points when coming to their forecasts. So they are someone that we rely on, and they, I'd say, they're being the most negative out of the three companies that we've picked out. So they're saying that they're going to see a 1.5% decline in average property values across the UK in 2021. And then again, they're forecasting a pickup in 2022 of a 2.5% growth throughout the year there. So there's three different approaches there. So one really optimistic, one sitting on the fence and being a bit average in Savills, and then JLL, the most negative of the few. But again, this is only a 1.5% decline, and it's taking in the entire UK.
Okay, so that's those experts. Now, let's have a look at what is your prediction for next year, Nick. And remember, we are going to be holding you to this next year. So at the end of the year, when we review this podcast and start making our predictions for 2022, just remember, we will be reviewing this. So, yeah, no pressure.
Okay, noted. So I'm going to take a bit more of a positive stance overall. And the reason I'm doing that is I'm basing it on my forecast being related to a positive vaccine rollout and, dare I say it, a Brexit deal being secured. I think if those two things go well and go to plan, then I think we will see a boost. I think the current data that we've given so far, they are basing they're basing their forecasts on the current market, and where we are at the moment is we're a bit in between. So we come to the end of the year, it's Christmas, it's holiday time, we're waiting on the vaccine news, we're waiting on various other government initiatives to are they going to end, are they going to carry on, stamp duty holiday, etc. So I think it's a bit all over the place at the moment, but I think if we get a Brexit deal done, we get the vaccine rolled out and COVID confidence increases in terms of how it's affecting the market, I think it can be a really, really positive year. So I do see, if you look at the average across the UK, taking into account the whole of 2021, I'm going just above Rightmove at a 4 to 5% average growth rate across the country.
Okay, just a little side note there. When this podcast comes out, there might actually be a Brexit deal or no deal. So when this is recorded, there hasn't been a deal yet. So I just thought I'd let the listeners know, just in case when this is out, there's been a result on that.
Yeah, so we're recording it right on a cliffhanger or a cliff edge. Any day now, we should hear.
Excellent. So my prediction, I'm going to be a little bit more pessimistic, which is actually quite strange because usually it's the opposite, Nick.
I keep everyone grounded.
Yeah. I'm going to be looking at a 2 to 3% increase. So I am being positive and I can see it increasing, but yeah, I believe it was going to average out across the year in the UK at 2 to 3%. The reason I'm being a bit more subdued is just because when we take the UK as an average, I do think London and the South East may be a little bit more hit overall, just in terms of the economy. So because of that, I just think it's going to bring the overall average down across the UK. But that said, I do think the main ones, sort of up north, northwest, etc., are going to do very well. But yeah, my average, I'm going for next year 2 to 3%.
Okay, I think that's a good point and worth considering in terms of the regional differences. So we're just taking a blanket approach of the entire UK market. When we're speaking to investors on a daily basis, we're always telling people to look at the performance, become hyper-local in your research and really analyse the local property market rather than just taking a blanket approach, because how Manchester, Leeds, Liverpool performs is going to be very different to how London, Kent, or down in places like Cornwall perform. So when we are giving our predictions and looking at the data we've mentioned, this, as we mentioned, is for the whole UK average property market, whereas what we really want to be doing is being a bit more specific in our research and our property focus. That's fair to say, right? Yeah,
I think that is fair. Also, next year, I've based my prediction on the fact that obviously I do think the economy may struggle a little bit. We might see a bit more unemployment, a few issues sort of with business going under, etc. But I just feel that you touched on sort of the vaccine being rolled out. As long as that remains positive and we start to get back to normality, although you will see people losing jobs, I think with how this has gone, we will see new jobs created. So I think that's going to be the positive. That will be a catalyst to help next year in the economy. I think in the media at the moment it's very negative across the board of what they're saying is going to happen and what's happening at the moment. And I just think with a lot of the businesses that will sprout next year, with how everything's changing, I do hope that there's going to be some jobs created because of that. I mean, you can see like Tesco's and Amazon, there's thousands of jobs being created with these companies where they're taking off and where the shift is happening with people shopping online, etc. So, yeah, I'm trying to take a positive out of a negative, I suppose.
Yeah, also companies like Deliveroo, the e-commerce market in general. There's certainly, been big opportunities out there, but I think it's fair to say we're really going to see that unemployment rate rise, certainly at the start of next year. But hopefully, keeping things stable, keeping a positive mindset as we go into the mid to back of 2021, things should be looking good.
So that's our predictions. And again, we are going to be held accountable at the end of next year, which should be fun. We are going to be slowing down for Christmas so we can relax a little bit and have some probably much needed time off, even though we probably still be working a bit. I know I probably will be, Nick.
But with a glass of wine in our hands. So.
Exactly, that's always the best way. It makes time fly by and makes things a lot better. But opening times-wise, we are going to be restricting our opening times, and we aren't going to be physically in the office from the 18th of December. But we still will be accessible. Our phone lines will be on but diverted, so you can get hold of us if needed. But your best way to get hold of us over this period is probably via email, as that's what we're going to be checking more often. So if you do need us, obviously info@trackcapital.co.uk, and then we will be returning to kick 2021 off on the 4th of January. And we can't say too much at the moment, but we have an exciting Manchester development in the pipeline, which we will hopefully be launching in January.
Yeah, exactly. So just to summarise then, we are in the office we're in the office till Friday the 18th, and then we're back open again on the 4th of January. However, you should have a dedicated point of contact, so feel free to email your investment consultant or just email info@trackcapital.co.uk. We will be responding to emails and helping investors throughout the break. And yeah, exactly right. So we've got an exciting new residential launch, quite a big size, coming brand new to market in January. So that's going to be really, really exciting to put a big focus on that. Obviously, as everyone knows, we're very, very fond of Manchester, one of the best performing markets, if not the best in the UK at the moment. So really, really looking forward to that. And then also, just as a side note, I think we are going to see a lot more development activity as we go into 2021. I think we're going to be a bit more stable in terms of the operation side and getting materials to site, getting construction teams out, etc. So I do think we'll see more products come to market as well. But certainly, if you're looking at Manchester and you want a brand new pick of desirable units in a new scheme, then do get in touch with the team.
Yeah, if the Manchester one is something that has sparked your interest and your ears have perked up, then feel free to just pop us a quick email to info@trackcapital.co.uk. Let us know that you are interested in the new Manchester development launch, and we will put you top of our list to let you know any information we have when we are able to release it. So next year we will be starting 2021 with our episode covering how to invest £50,000. So we're going to look at what the average investor has to spend, which tends to be around 50,000, and we'll look at how best to invest that valuable money.
Yeah, I think it's a really good subject to start with. If people have been saving up a deposit throughout 2020, maybe they've got one or two properties already, and then they've got that deposit there good to go, working out, the best way to use it, how to deploy the funds, what strategies, what yields can we look at, what our overall expectations are. So yeah, we've got that to look forward to as we come back in 2021. We'll be telling you, in our opinion, how best to invest £50,000.
So that's all we have for you today, and that's all we have for you this year. We look forward to seeing you in 2021. So thank you to all our listeners. that have been with us for the launch of the podcast. Thank you to all our clients, investors and partners. You've all made it an excellent year and one to remember.
Yeah, it's been really, really exciting this year. Lots of progress within the business. So, yeah, big thanks from us and the team to partners, listeners, our agent partners, developers, etc. And wishing everyone all the best for 2021.
Yeah, so we wish you a Merry Christmas and a Happy New Year, and we will see you next year. Take care.
Cheers, guys. Bye-bye.